Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back everybody and welcome back to the channel. Today is another day and I'm glad to see you. Last week I posted a video here teaching you how to trade US30. I explained some basic concept to you, the concept of initial balance and how to use the initial balance with the Fibonacci Arc and the Fibonacci Expansion tools. These are very important tools if you want to trade as a day trader, if you want to trade US30 as a day trader. Trading US30 is very easy as compared to trading forex, because if you're trading forex, you're looking for different currency pairs at a time. Trading US30, you are focusing only on trading that particular index as US30. That's why I just prefer to trade US30 alone as compared to the other index. US30 has some characteristics I'm going to teach you later, but for now, let's go back, and this is the second video, so let's go back and let me explain the concept on how we are going to buy and how you are going to sell using the Fibonacci Arc, using the initial balance concept, and making some profit from US30. So let's go to the chart and let's begin with today's video for today. Okay, so before we begin, let's have a recap of what we learned last week. We learned that initial balance is the first activities within the first 1 hour of trading time. For instance, if you open any chart, the first 1 hour of trading activities, or the first activity that occurred within the first 1 hour of the trading chart, can determine or can impact what the market may do next. So you could see that at this zone on this chart, you could see, let's assume the first activity that occurred. Let's go to different parts of the chart. You could see the first activity that occurred within that particular time zone. These activities impact what actually is going to happen in the market. How would you know whether the market is going to trend for the day, or the market is going to rate for the day, or how the market is going to behave for the day? Because knowing that as a trader is what's going to give you the edge over the market. You cannot trade any market without knowing how the market is going to behave within the day, because in day trading, we do predictions. Let's begin and see how actually you are going to analyze it and you're going to trade exactly with the Fibonacci Arc and the initial balance. Okay, so when you open your chart every day, the first thing you have to look for is the initial balance. What is the initial balance? The first 12 candles, or what's happening within the first 12 hours, the first 1 hour of the trading. So let's see, US30 is divided into 3 sessions. There is the Asian session, which in my local time ends around 6 o'clock in my local time. That is in my local time. I don't know where you're watching me from. You can also check it in your local time. And then there is the UK session, which ends around 1 p.m. in my local time. And then the US session. So 3 sessions, because the index is 24 hours, right? So the Asian session, the UK session, and the US session. We are going to trade this strategy with only the Asian sessions and the UK session, not the US session, because the US session is very hyper. It has huge volumes. You're not going to trade the US session. So when you open your chart, my Asian session begins exactly at 12 midnight, because my time is GMT plus 00. My time is exactly GMT plus 00. So I don't know your local time. So you can see that on this chart, I have separations on the chart. That's where the market begins. So at 12 p.m. in my local time, if I'm able to wake up, then I can trade this strategy. If you are a full-time worker, you can also trade this strategy, because you can trade before you go to work. So when you open your chart, you realize that the market began from this zone. This is the first area market began. Now, from this zone, you ask yourself, where was the first time market retraced after the market began to make a move? So you could see that the market began to make a move to the upside. Can you see? To the upside. Then, somehow, the market reversed. So the question you have to ask yourself is, why did the market reverse there? Why? That's where we have to mark our level as the Fibonacci Arc, because within the first 1 hour, we realize that the market actually reversed at a point. So we're going to put our Fibonacci Arc from that particular zone. So we click on the Fibonacci Arc, and if you don't have the Fibonacci Arc on your chart, then you right click, you go to customize on MT5, and then when you go through all this, you can find the Fibonacci Arc. Since I've already inserted mine, I can't find it here, but if yours is not inserted, you can find by one, then you insert, and then you click OK, and it will appear here. The same thing happened to the the Fibonacci Expansion tool. So you customize, you click on the menu bar, the toolbar, you customize, and you can find the Fibonacci Expansion tool, then you insert. That's how we do it. I have searched on TradingView. I couldn't get the Fibonacci Arc. I don't know what happened. I wanted to also search for it for you guys on TradingView, but I couldn't find it. So which means if you want to do this strategy, you must have MT5, or you must analyze it with the TradingView and you take your trades with MT5 either on your mobile or on your laptop. Okay. Okay. So now after you determine where the market reverses, now it's time to draw our Fibonacci Arc. So let me just delete it and start again so that you don't get confused. You know what you're doing. So first, when you see your chart from the beginning of the day, you ask yourself, where did the market retrace within the first 1 hour? Where the market was making up move, right? From here, you can see the market is making up move and then it retraced downwards. So this zone is where the market retrace. That's the first time market retrace within the first day. So that's where we are marking our level. So we take our Fibonacci Arc 2, we mark from the beginning of the market. Where did the market begin? This is a bullish candle. If it's a bullish candle, the market began from the downside, right? And then we pull it to where the market retrace. So that's it. Now we've drawn our Fibonacci Arc. Now, what are we looking for? After that, we have to draw our Fibonacci expansion tools. So we click on the expansion tool. We click from down of the arc to the top of the arc, and the expansion tool appear at the top. If you want the expansion tool to appear downwards, the same thing, you click on the expansion tool from up to down, and it will appear downwards. Now, these are the rules. If your Fibonacci arc is going to be wider, then the market is going to range. Remember from last week, right? The market is going to range. If the market is going to range, then we are going to use these levels, the first level of the expansion tool and the last level of the expansion tool. But in this scenario, you could see that the Fibonacci arc is very narrow, and the rule says that if the Fibonacci arc is narrow, we are going to wait for the market to break all the levels because it is very small. We can't trade in between the levels, so we have to wait for the market to break all the levels like this. And then when the market is able to break the levels either to the upside or to the downside, now we take our trade. Now the levels becomes our strong support, our strong barrier. We put our stop loss behind the levels so that the market may not be able to push back and take our stop loss out. So that's the rule. So rule means that what? If the Fibonacci arc is narrow, what do? We don't use the Fibonacci arc, but we wait for the market to break all the levels and then we take our trade. So for this day, on this scenario, you could see that after we drew our arc, market began to play around the Fibonacci arc. We can't use it to trade because it's too narrow. It can't protect our stop loss. So we wait for the market to break either here, either the downside here, or we break the upside. Or the market breaks the upside. So in this scenario, you could see that within the day, the market broke rather the downside. So where do we take our trade? This is where we take our trade. The market broke and the market closed. After the moment the market closed below the downside, now we are in a trade. We can take a trade successfully. So if we are to trade here, let me clean these lines. Okay, let me rather use the rectangle. So if we are to trade here, we would have entered our trade here. Our stop loss will be behind a very important zone so that the market cannot just come and take us out. So we should be behind the arc or a very important zone. Take profit target is going to be twice as our stop loss is 1:2. Don't take more than 1:2 because the US30 doesn't really move much. That is why it's also safe for you to trade. Okay, so just 1:2 risk reward is enough. So where would we have take our profits if our risk was let's say we are risking 800 points, then we'd have made 8 plus 8 is 16, which means 16 points. 16 points. Let's see if we would have made a profit. Yes, and you could see that the market would have taken our take profit because all the way from here to there is more than 16 points, right? Good. So here is that, and stop loss here, entry there, stop loss there, and take profit target all the way there. We'd have made our profit for the day. You see the market kept moving. So trading the US30 is very simple with this strategy. So now you understand the concept. You understand the first example I've set here. You understand the first example. If the Fibonacci arc is narrow, we don't use the Fibonacci arc to trade, but we use the last and the bottom level so that when the market breaks all those levels, now those levels becomes our strong important support zone. Then we take our trade. Let's see another example on the chart. Okay, so on this day on the charts, as you can see, where is the initial balance? You can see from this side is the first activity. So what do? Now we look for our Fibonacci arc. We draw from the beginning to where the market should trace. Very simple. You could see the Fibonacci arc is medium, which means if it's medium, it means you are going to use it to take our trade, right? Good. If it's smaller, what do we do? If it's smaller, we use all the levels. We pack all the levels together and we take when the market breaks the levels. If it's medium size, we can use the Fibonacci arc itself to take a trade because it can protect our stop loss. And if it's very wide, we can also use it to take our trade. But if it's wider, it means the market is going to range for the day. So on this chart today, you could see that on this particular chart, you could see the Fibonacci arc is medium, which means we can use it to take our trade. So now let's plot our expansion tools. So we click on the expansion tool from bottom to top, and the tool will come upwards, and from top to downwards, the tool will come downwards. Now we have to mark our important levels. So we mark our levels, and we mark the 61 level. We don't normally use the 100 level. As I said, our focus is focused on the 61 level and the 161 level, which means if the market moves all the way from here to here, we assume it has moved like 100%. If it also moves all the way from this zone all the way back to the arc, we assume it has moved like 100%. So it's like the market is divided into percentages. The market also moves all the way from here, from the arc to this level, to the first 61 level, we assuming it has moved 100%. If it has moved all the way to also here, we assume it has moved 100. So that's why we don't use the 100% level, but from 61, then all the way back to the 161 level. Okay, so now that we've marked our important levels, what are we looking for? If the market touches the first level, because the Fibonacci arc is a little medium, is medium size, which means we can use it to trade. So market touch for the first time and reacts and close below, then we can take our trade. And as you can see here, the market came to touch, it closed below, so we'd have taken our trade here. So this particular trade would have been a losing trade because the entry should be here and stop loss behind the second level and take profit target as twice as our stop loss. But unfortunately, we would have been taken out because the market actually continued going and it hits through, which means this would have been a losing trade because it's not every time it's going to be a winning trade. No strategy is 100%. So always follow the rules, okay? Follow the rules. So once your criteria is met, you just take your trade. So this would have been a losing trade. Where else again would have been the opportunity? The next opportunity would have been when the market came back all the way to hit the Fibonacci arc again. So the market came all the way back, hit the arc, and you can see it closed above. But here is too far. We can't take the trade there. We have to wait for the market to retrace. So your entry would have been here. Stop loss behind the first Fibonacci arc. Take profit target as twice as your stop loss, and you would have made your profit. So here the market would have hit your take profit target all the way here, and it would have been a winning trade. So on this particular day, if you traded this same strategy, you would have gotten one loss, you would have gotten one win. So let's see that. Let's say the loss, if you want to risk 1 to 2 risk reward, let's say you are risking $200 as your stop loss. So let's say $200 as your stop loss. Then your take profit target should be as twice as your stop loss, right? Take profit target should be what? 400. As I always say, take profit target should be 400. As simple as that. So if your stop loss is 200, take profit target to be 400. So here you would have lost 200 because it wouldn't have hit your profit target. But here your stop loss would have been 200 and your take profit target would have been 400, and you would have made your profit for the day. So one loss and one winning trade for the day. Let's move on to the next day or the previous day so that we see if you can get another trade to take. Almost every day using this particular strategy, you can get a trade to take on US30, either one trade or two trades. Okay. So on this day, you could see what are we looking for? We're looking for the first movement. So market made movement, but this movement, see something? It was only 2 candles, so we won't count it. We want to take all this movement as one. And what was the first retracement? What is the criteria for a retracement? At least the candle must retrace at least 4 times. There should be 4 candle interval, right? And you could see that after the market made a move, it has a lot of retracement here. So which means our Fibonacci arc will begin from here and end from here. So let's start. We draw Fibonacci arc from this zone all the way there. And you could see the market is divided into 2, upper part and the lower part. So what are you looking for? Today we can trade with the arc because the arc is not that tiny, it's a medium arc. So now we draw our extension tools, extension, expansion, and here to another expansion, and that's it. Now we mark important level. So from here, first important level, then the second important level, then we have another downside and the bottom side. And you see obviously how market reacted around this level. So where is the opportunity? The opportunity was when the market closed, because this was the first movement. The market closed below this arc. This was the closing candle. Market closed below this arc. That would have been our entry point. So our entry point would have been here. Stop loss is behind the arc or behind some good place. Take profit target is as twice as our stop loss. As simple as that. So your profit target should have been taken somewhere here, and you would have made your profit. So as usual, if you are risking 100, let's say your account is small, you are risking 100. So let's say you're risking 100, then your take profit target would have been what? Would have been 200. Always 1:2, no matter the amount of capital you're using to trade. Okay, no matter the amount of capital you're using to trade, always your take profit target should be 1:2 risk reward. Always 1:2 risk reward. Never take something less, never take something more. If your account is very small, you can risk 50 to make 100. 50 to make 100, 50 to make 100. If your account is very wide, very bigger capital, you can risk 300 to make 600, 300 to make 600. If your account is a bigger account, more than $10,000 or $10,000 above, then you can risk 500 to make 1,000, 500 to make 1,000, 500 to make 1,000. Now you understand, it's very simple. Trading is very, very simple. Okay, as I said, trading is very simple, but if you don't know what you're doing, you're going to mess things up. You will never become profitable. But if you know exactly what you're looking for, what you are expecting on the chart, and how you're going to analyze the chart, then trading becomes simple, because trading is just like any other business. Okay, so this is a very typical example. So today you have gotten a winning trade for this particular chart. Okay guys, so as you can see, it's very, very easy to trade US30 with this particular strategy. So what I want to urge you is that you must always go to the charts after you learn something on YouTube, guys. Don't just go and just be clicking buy and clicking sell. Go to the chart and do the same thing as we've done here. Practice and practice. Go back to your chart, open your US30, go to your chart and practice and practice and practice until you become good with it. So that's it. It's very easy to trade and anybody can trade it, so far as you have patience to sit down and make sure that your confirmations are formed and you understand how to draw your lines. So that's all for this video. If you are interested in learning how to trade, you can always send me a message down below. There's an email below. Just send me a message, Mr. Seth, I just want to learn how to trade, or I want to learn how to trade, and you can join the weekend training program. Okay, irrespective of who you are, whether you are old, whether you are young, whether you're 50 years, 45 years, whether you are a full-time worker, either you're a nurse, you are a teacher, a security man, you sell, you have a shop, anybody at all can join, because learning how to trade is a skill that anybody should learn how to do, because it's going to give you, even if you're not your full-time job, it's going to give you extra income on the side. Okay, and you don't need a laptop or you don't need fancy computers to be able to do that. To learn, you just need your phone. So far as you have your smartphone, you can join the weekend training program. You don't need a lab. Some people, they think they are going to show them their faces online, so they feel shy, or no, don't do that. So far as you have your smartphone and you have Telegram on your phone, you have Zoom, you can download Zoom on your phone. Just send me a message. Hi, Mr. Seth, I'm ready. I want to learn how to trade, and I'll just tell you what to do. Okay, don't feel shy. Anybody can join, because learning how to trade is a very good thing. Okay, until then, go back to your chart. Practice, and become good with it. So that, because trading is a skill, okay, and the skill is in your mind. The more you see good things on the chart, the more profit it makes you. If your brain cannot see any good strategy on the chart is there, everybody is watching the same chart, but you'll not be able to make profit because you don't have anything in your head. But the more you're able to practice and see more examples and see different scenarios, then you become a master of that particular strategy. Okay, so practice is the only thing that can beat perfection. Don't forget, practice makes perfect. Okay, so take care of yourself. Don't forget to like and enjoy the video, and don't forget to like and share the video, or just subscribe to my channel if you have not subscribed, and come back every time to watch such videos. I'm Setowas, and I'm signing out. Take care of yourself. Bye bye.